My friends, let's do this. Welcome back to the channel. This is going to be my AMC stock weekly outlook video. This video is probably going to be a little bit longer than my normal videos. I try to keep those in like that 10 to 15 minute range. This one is probably going to be a little bit longer because I'm going to go over some possibilities that I see for this week going into it. So before we jump into the actual chart in the video, as always, I'm not a financial advisor. Everything I'm giving you is for educational purposes. You need to do your own DD. You need to do your own, you need to trade your plan is the best way to say it. At the end of the day, like I always say, you're the one who's going to be stuck with your portfolio. So you need to make decisions based off of your situation, not mine, not anybody else's on the internet. Also, too, go ahead and follow me on Twitter, Colin_Gladman. It's the easiest way to keep up with everything that I'm going to be doing and asking me questions and just everything that we're going to be tracking throughout the week. If news comes out, anything along those lines. So let's jump into it. First thing I want to go over, we're going to jump into the chart here, is how I'm actually going to go to the 1 minute. So I almost never go to this time frame. But what I wanted to show you, let's just get this out of the way, is what this halt looked like on Tuesday of this past week. So you can see with the visible range, it shows you the buying and the selling pressure that goes on with the stock. And you can see it's all pretty natural movements like a stock should look, up and down. Now look over here. Look at this right here. So this is going to be where we halted. And I mean, if that's not the most unnatural looking price, I mean, to me, that just says that is all computer algorithm trading, shot up, got halted straight back down, allowed them to add more strikes to the option chain, everything along those lines. So, yep, we got screwed there, my friends, but it is what it is. We just got to move on. You know, I posted a couple of times, like, what are we going to do about it? And everybody's like, we're going to yell and scream and get mad and bang our keyboard. And that just doesn't get you anywhere, okay? Being mad right now. Here, let me try. Yep, no. Banging my keyboard didn't put any money back in my account. So we just got to move on, keep on trucking. So, but that just goes to show you what computers look like when they're trading right there. So I made a video yesterday looking at AMC from a upside down perspective. My wife has this little game on her phone that's like a little Scrabble, like a word search game. So it's got this little circle, with just different letters in it, and you're trying to figure out, the words for the puzzle above. And on the side is a little button that you can push, and all it does is move the letters around. Okay, it doesn't change anything. It just moves the letters around in the little dish that you're looking at. And so what it does is it gives you just a different perspective on it, where you can go, oh, okay, now I can see this word. And so that's what I did whenever I flipped the chart around. So go watch my video from last night, and you'll be able to see what I was talking about as far as how this is distribution and where it could go from there. But that's for that video. So for this video, what I want to look at is what is going to be some possibilities here. So if you are a believer in Elliott wave theory, which I am, then you would be looking at essentially, where's the little tool? They've got a tool specifically for Elliott wave theory. Hold on. Yeah. So we'd be looking at basically going a 1, then a 2. Let's just say, assuming this is the bottom of wave 2. Honestly, I don't think it is yet, but then you would have 2. Then you usually have a bigger wave, that would be, wave 3, then wave 4, then wave 5, so on and so forth. Something along those lines, okay? So if we get in here, We back up just a little bit. So we broke out of the long term where we had, we had a rejection point here, rejection point here. Nope, not quite there. We didn't go quite back up there. Dang it, I hate that it goes away. Rejection point here. So you guys get the picture. So we had all these different rejection points right here. And we finally broke through with some good volume. And then I tweeted out that we're going to be coming up to a range that if the volume doesn't continue, so I'm going to go back to the daily, that if the volume doesn't continue, getting back up here into this $30 to $34 area, we're going to get rejected off, come back down, and we're going to have to make, kind of a reverse J shape and then maybe break through on the second go of it. And so far, that's exactly what's happened. So how far is this move going to retrace is the big question. Well, as everybody knows, we've got the gap right down here. So let's see here. Closed at $20, open. So we've got a 30-cent gap right down here at the $20 range. We don't necessarily have to, but like I was telling somebody on Twitter last night, we're so close to it. I would just see something that is going to be, maybe Monday, we come down here, we fill the gap, and then we can just, we can start making our way, back out of this. That's what I would like to see, something along those lines. I just assume not leave this gap. Now, also, like I said in last night's video, it would make sense for people to go, okay, we're going to go fill the gap, let's play some puts to come down here, and it would start to come down here, and then a test of this line. So unless we squeeze, breaking out of here and then coming back and retesting the top of this line, which runs from our all-time high, okay, where we had the false breakout. Once again, this is where I thought we were going. When we came back here and we touched right here, this is where I thought we would start pushing back up. And we didn't get the follow through there. So we didn't get the volume there. So coming back here, we're basically seeing this move, my friends. All right. So a break with a retest. Break with the potential coming down and retesting. I think, and once again, when I use my TA, and I say my TA, I'm just using all the different TA tools out there. It's just my interpretation of those tools. But I don't think you should ever just use one specific, theory or anything along those lines. I believe in looking at a little bit of everything. And when you kind of go, okay, let me look at everything. Let me look at the whole picture, if you will. Then that really helps me decide what is my most likely scenario. Okay, and the most likely technical scenario here is we got rejected off this line right here. So coming back and retesting the top of it before pushing back up towards testing this line up here that's going to be up in that $28 to $30 range, that is what makes the most sense to me. That would also fall in line with Elliott wave theory. So if we go to Elliott wave theory, talking about the relationship between Fibonacci and Elliott wave theory, wave 2 is typically a 50%, 61.8%, 76.4%, or 85.4% retracement of wave 1. Okay? So, if we go over here and we look at the retracement, and look what we have. So the 0.5 retracement of 21, so it says $21.99, so just call it 21, will be coming down here and pretty much touching right at the top of this wedge and then pushing back up. So I think that is the most likely scenario. When, I know it's weird. Oh, sorry, let me make sure I get right on the top right there. Yep. So 21.07, so right in that $21 range. So coming down here, hitting the 0.5, testing the top, maybe wicking down below and then pushing back up, I think right now is the most likely scenario. overall, over the next about 2 to 4 weeks, and honestly beyond, I mean, there's going to be retracements along the way, but overall, over the next, like, especially the time frame of like the next 2 to 4 weeks, I'm going to be pretty bullish on the action overall. There's going to be pullbacks along the way, okay? But I always use the example of thinking of a stock like a lung, where it's got to breathe in and breathe out. So the breathing out would be moving up. The breathing in, we got to cool off a little bit, get a little bit of oxygen back in the lungs before we then can breathe out again. So that's all we're doing. Once again, we ran 160% since this low on March 14th. So I hate the halt as much as anybody else does, but it's allowing us to retrace, to come back here, to test, and then begin our push-up. So I do think that we will see downside. Typically when you see downside after hours, I always say take after hours with a grain of salt, and I still think that. However, typically when you see downside into after hours, you're going to see that continuation follow through into the market. So and we could do it quickly, even a move down Monday morning to retest the top right here. So for me personally, I would be a buyer of shares right here in this, 21, right around the 0.5 retracement. If not, then coming all the way down to the 618 is also a likely retracement for wave 2. The 786 would be 1593 and the 885 would be 1446. Now, those retracements, I would be very surprised if we see that one. The 0.5, to me, is the most likely one. And, I can make a case for the 618 if it was something, let's just say the market is just doing awful, bad news comes out, the Fed speaks up and says something, Powell comes out and says something, we could see a momentary, dump all the way to the 618 before pushing back up. That would also make sense, okay? But if we kind of keep going, with the way the market has been going, a normal retracement to touch and then start moving back up would be where I think we could go. So if we go back to our Elliott wave theory rules, so wave 3 is typically at the 161.8% of wave 1. So if we use the fib extension tool, and let's say we come all the way down here and touch, okay, the top of the wedge, then the 1.618 is going to take us to about 56 for wave 3. Then if we look at wave 4, 14.6, 2.36, or the 3.82 of wave 3. So I'll be honest, I haven't planned this out. I don't know if this is going to work like this. If we go here, and let's say wave 3 starts right there. What did it say was the most common one? Let's just call it the 382. Let's go worst case scenario. So the 382, yeah, it's not going to let me do it like that. Okay. Well, I'll just get my phone calculator. We'll do it that way. So if wave 3 takes us to 1.618, be 56, 35, give or take. $3.8 would pull us back to around 34. So that 34 would be pretty much like the top of wave 1, and then we would move on up towards wave 5. So I think that is the most plausible scenario for right now. Now, will that all play out this week? I don't know. I mean, it could happen. Things could happen quickly, but I don't think that's the most likely. I think that's what we're going to be looking at over the next, 2 to 4 weeks. And like I've been saying since back here, it took us from essentially November the 16th all the way until March the 14th to find our true bottom. Now, you could potentially say, realistically, we found our bottom here, okay? And then we accumulated before moving back up. And I would be okay, and I would agree with that. But so from November the 16th to January the 28th, that's still what? That's still 2 full months. Then we accumulated for basically 2 months. So it might take 2 months for us to get out of here. So if we did that starting on March 15th, that would be May 15th. But the reality is if at May 15th, we're sitting up here and we kind of go 1, then 2, and then what I say is about 56 and 3, and come back 4, and then 5. If we're sitting above all-time highs, come May, everybody, including myself, is going to be very happy, and we're going to be okay with that. So, and this makes a lot of sense. Once again, we didn't just drop straight down. All right, this move was not, we didn't do that. Okay, we kind of grinded. We worked our way down here. So I think we're going to have a little bit of work to do on our way out. Now, that also too would be leading up towards, the GameStop split. And, there's still more information, so I'll address that once I feel like, once again, I got a bunch of good quality information. I definitely don't want to jump the gun on that. We want to find out what kind of split, it's going to be. And like I said, we just want to make sure we keep the information clean. Also, on this drop, so, whoops, I always do that. So, leading up to when GameStop is going to be going into its split, AMC seeing some real positive price action, I think is going to be more than likely. If GameStop starts running leading up into the split, AMC is going to come along with it, and this is the most probable, plausible scenario for me. What I love about this drop, other than, I don't like dropping any more than the next person, but what I do love about this drop is the fact that the volume is drying up as the drop is happening. So if the volume continues to dry up as we come down here and then we start curling back up, and like I said, it's not just going to be straight lines. We're going to have, we're going to have stops along the way. We're going to have pullbacks along the way. What this move has done too is if we go over here and we look at the RSI, it's allowing the RSI to start cooling off, getting back closer towards that neutral territory. We were definitely getting up into the overbought territory. The only time it's been higher is when we had our gamma ramps and squeezes, back in January and June. So the RSI was getting hot, needs to cool off, so that way we then can, push back up. That is what it's allowing us to do. If we go to the weekly, a great indicator here is that the weekly MACD is crossing over. So this indicates, bullish momentum, over the next foreseeable future. Okay. Now we want to make sure, we start getting some follow through. So if we dropped early in the week and then started pushing back up, starting our wave 3 towards the end of the week, that's what I would like to see. That would keep our MACD. So we'll keep an eye on this. We just want to make sure that even if the price action goes down, overall our MACD is still going to be curling upwards. Also too, I'm going to go back to the daily chart. So if we start looking at some indicators here, so if we start looking at the MACD on the daily, you can see it's starting to curl down just a little bit. So, if that continues to curl down, if we cross right here, we might even see a, further pullback, okay? And that would lead us to like maybe the 618 or something along those lines. But once again, I deal in most likelies. So when I was doing my coaching sessions yesterday, I was showing right here, let me do a horizontal line, just make sure it's nice and straight. So, right here, this area basically at, $19.73. It provided support, then resistance, then we tested it, failed, had to come down, tested it, failed, had to come down, push back up, didn't quite test it all the way, push back down, came back up, then we broke through, then it provided support. So right here in this $20 range, I think is going to be our low. So if it's not right here at the top of the wedge, then I think coming down here and bouncing off 20 off the gap fill would be our most likely scenario. So wave 2 could either come here, or I think it's going to go something like this. But that is going to be what I'm watching for, as far as I really don't think a break too far below 20, other than something crazy and maybe a wick down or anything along those lines, would be, because we don't have a gap here, 18, 26. Yeah, we don't have a gap right here. So the gap right here is going to be the one that, honestly, I'd be okay with it closing before, moving back out of here. So option chain wise for this week, make sure I'm in April 8th. So option chain wise, the 25 is going to be where we have our first largest amount of contracts. And once again, to me, this is obvious sign of retail trading. I feel like retail trading always does, the most obvious numbers. 25, then the next big one, 30, then the next big one is going to be probably 35. Yeah, 6,000 at 35. Let's go up here to 51. Yeah, 4,500 already at 51. So, retail is definitely ones who, does a lot of contracts. Of course, institutions do them as well. But I see way more people on Twitter who buy option contracts, I feel like, than buy shares. So that's going to be our first level of, real area that's going to, create some hedging that's going to have to take place, as far as market makers go. If we go look at the puts, if we do start, pushing down at all, then if we do hit this 21, 21.50, $20 range, then there is going to be some hedging that has to go on. So when we drop, you essentially get reverse hedging. You get a gamma squeeze going the wrong way. And that's why stocks that are heavily traded, like AMC, that's why you get so much volatility going on, is because, market makers are having to constantly, hedge for contracts. And so with big pushes upwards, they've got to hedge for all those contracts going in the money. And then when big pushes downward, they have to start hedging for all the puts that go in the money. So that's why, you see those bigger swings. So overall, doesn't look too crazy option contract wise. Once again, that changes all the time with the price action. If we go out to the April 14th one, which is the monthly expiration date for the options, 30's already got 11,000, 25's got 7,000 open interest. So nothing. It's just nothing too crazy. That's interesting. 14,959 contracts at the 23 strike for puts. It's an interesting number. Yeah, and then 20,000. So puts, once again, guys, I think downside first is the most likely thing to happen. Not crazy downside, but I think coming down to that $20 to $19 range before moving back up might be our most likely scenario. And honestly, it would be one of our more healthy ones. Coming down here and, touching the top of what was resistance for us since our all-time high. So since our all-time high, we've got resistance, false breakout, support, back to the dump. Two big touches here. Remember when we thought this might play out as an inverted head and shoulders, and we started to push back up, and then we dumped out again. We didn't get the follow through there either. So this line has been resistance for a long period of time. So it's hard for me to imagine a scenario that we break out of this and don't come back and at least retest it. That's just not how it works. Okay? So I definitely see downside to that, at least right around the $21 range, maybe not quite that far, somewhere between 22 to 21 as far as a test, maybe a wick underneath before pushing back up, before we keep doing our Elliott wave theory sequence right here. So that's pretty much going to be everything. All right. So just we gotta chill a little bit. We gotta load up on some rocket fuel. I will be super bullish if we come down here to retest this $21 range. If we start dropping out into that 30 $40 million volume. I say $1 million, shares traded volume. If we start dropping in volume, we'll see when the bears really start getting exhausted before we can start, pushing back up and starting our wave 3. Okay. And once I see that happening, then I'll be, buying some more shares, probably be buying some calls. The only thing I want to say about, buying options is not the same thing as buying shares. Okay. It's essentially you're purchasing a contract that allows you to have the leverage of 100 shares, even though you don't actually have them. You didn't put up the capital for those 100 shares. So I saw firsthand the volatility that options can really bring. I had calls that went from 350% positive down to almost 50% negative in like 24 hours. Okay, so it's essentially like a 400% swing. So they can be incredibly volatile. So don't diamond hand your option plays when you see those bad boys getting pretty green. Please take profit. Please be smart. That's how they win. Don't just bank on YOLOs and lottos. Okay, so I'm learning more about it. I learned my first lesson the hard way, so I'm gonna learn my second lesson, hopefully the green way. All right, so I'll probably buy some calls and everything like that. We come down here, start testing this volume dries up, and I'm going to be buying some calls for the next push up. But as always, you do you. So that's what I think we might see this week. I think this week might be pretty flat. So April 8th. So I think the most likely scenario for this week is kind of a push down here, maybe even a slight break under, start curling back up, towards the end of the week, finishing around that $22, $23 range. So I think most likely this week, we kind of might make the horseshoe shape, but we've got some volatility going on, so it might be a little bit more volatile than that. But if the volume dries up, it's not going to be volatile. We'll just see a nice steady move and curl. If the volume is there, then we might boom, 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 start ping ponging all over the place. All right, so just be smart. You guys know me. I'm trying to keep it real around here. I'm already seeing all kinds of, we're going to the moon on Monday and everything like that. And, everybody's definition of the moon is different for sure. But we could have some nice push-ups on Monday. We could just go here and go. If I go to the 15-minute, you can see so as of right now, we are starting to break out of this downtrend right here. Okay, let me draw that a little bit better. Yeah, so we are, make that line a little bit thicker for you. So we are starting to break out, but I think a breakout in the retest or a comeback in. So we don't have to go all the way down, but overall, once again, over the next about 2 to 4 weeks, I definitely see a lot of upside coming our way, but I think we just need to be patient. That's what I always talk about. That's why I always put it on my Twitter thing of I spell patience with PAY, and because that's just what you got to do, especially when it comes to a play like this. Oh, look at that. Look at that. So this falling wedge would push us all the way to almost perfectly touching on that trend line. And yet I'll still have people tell me that TA is a waste of time and it don't work. But that's going to be my most likely scenario. So I think finish out this falling wedge, come down here. We could break out sooner. We could come out here for sure. But I would like to see a retest. And if anything, Monday, if it starts to push up on Monday, and then we could curl back down and then go. So just chill. I really think at this point, a retest or a gap fill is the most likely scenario before we start our wave 3. So that's where I'm going to leave it for this video. If it was helpful, you know the deal. Please like and subscribe. Help the channel grow. Tell your buddies about it. All that good stuff. But other than that, we got a real good next, month ahead of us, I believe. Okay? And once again, if more news comes out with GameStop and GameStop, keeps on ripping, we're going to go right with it, just like we have been. Okay? Y'all be good. Thank you for taking the time to watch. I appreciate you. If the education is sinking into your brain, that is the number one goal of my channel, is to help as many people as I can through education of TA, because once this baby does, rip off, if you want to make it in the market long term, you need to know and understand how it works and how it's traded, so that way you can be as successful as possible. And I want myself to be successful, and I want to help pull as many people up that ladder of success as I possibly can. So that's the goal of this channel. If you're a like-minded individual on that, once again, please feel free to help the channel grow. But y'all be good. Enjoy the rest of your weekend.